I think mid to long term, India will continue to be growing at a fairly brisk pace. So that's the fundamental. What happened, I think what happens is whenever there is too much of a cash inflow, maybe there is a outflow for a little bit, which is what the public markets are seeing, and globally we are seeing some corrections, and we are seeing maybe the reflection of that a little bit in India. But if you go back to the fundamentals of building strong businesses, I think the next 5 to 10 years is going to be good for us in India.
Sir, but don't you think it's a little unfair on these companies? I mean, the last couple of years, all the stories were about, the amount that they are raising at various valuations. And now suddenly you turn around and tell them, arrest cash burn and bring in unit economics. How is that going to happen overnight?
In this world, nothing is unfair, right? So if we were living through these sumptuous, oversupplies for last 6 months or 12 months, the entrepreneurs also need to figure out what happens if the land around them dry up a little bit. So it's a good learning. It goes back to the basics, but I wouldn't say anything is unfair in this game. If you have to run a startup, you have to be able to measure up to all of these checkposts.
In terms of the consolidation that people talk about, we are already seeing it happening in some form. Common Floor getting merged with Quicker, Zorooms getting acquired by Oyo. Are we going to see more such instances, and is there a stronger case for that now?
As the large checks dry up a little bit, companies which were getting used to slightly higher burn always find it difficult to attune themselves back to the market reality. So some of them may or may not make it, but that's the reality, right? So the rest of them should learn from other people's and their own mistakes and kind of move on and make it happen for the next 6 to 12 months while this kind of an environment is out there.
How would you really detail the changes that happened at Flipkart recently?
So again, I think at Accel we have been fairly fundamental about how to build a company. Like I said, just because there was more money, we shouldn't have changed our business plan last year, which means that we shouldn't change it this year as well. Obviously if money completely dries up, there is a problem. But I don't think any such thing is happening. The right companies are still able to raise money. The right business models are able to raise money. So it's a question about sort of attuning yourself or toning back a little bit of the spend, which you are probably trying to do too many experiments. So cut back a little bit on that. Most good companies should be able to go through a downturn without getting seriously hurt. In fact, market leaders actually come out stronger at the other end of a situation like this.
Right. Finally, I want to understand, for startups watching this show, where will Accel be investing in over the next few months? If a startup is watching this show, what should they really be pitching to as far as Accel is concerned?
We have done a bunch of stuff around local services. We have done a few investments around financial services, actually, technology-driven. We have done a few which are mobile-only, mobile-first kind of consumer plays. And then, of course, software as a service, where we have been doing it for the last 4 or 5 years. Continue to be bullish on that, as well as in healthcare.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.